Well, look at what we got over here. Some orders hanging out on ES. We're going to talk about on today's Stock Market Brief how we can get the price up into those levels because it is a very important level to watch. Got a lot to discuss. We're going to talk about some potential opportunities in the market as well, per usual on the Stock Market Brief show. We're going to first look at the book map right here, right? This chart doesn't look like your typical chart. This is something that I personally use intraday trading. Why? Well, it's like level 2 data, right? It's market depth. It allows you to see behind the candlestick where orders are hiding out, okay? So just looking at a candlestick alone, you're missing out on a lot of the data. For example, this area right here. These big levels can act like potential magnets. So this is going to be an important level to watch if price starts moving up in there. But we will still obviously look at the candlestick charts. I want to first call out the daily expected move for ES. So 4,423 to the downside, which is right at around these level of liquidity right here, where you can see there are some orders that were hanging out intraday. And we actually bounced from that level to today, and then you can see it's kind of just going across the screen in the after hours session. Okay, so that'll be an important level to watch going into tomorrow for ES, but we'll hop into the SPY and the Qs momentarily. And then to the upside, the upper daily expected move is 4466, which would put us just at about right here. But if we get up into this area, I just want you to pay close attention up to the 4480 level, because these, like I said, can act like magnets. Now, if you are interested in this bookmap software, they offer my subscribers a 20% off for the monthly plans, but you can get up to 50 off if you do like the quarterly, half year, or yearly. The link's in the pinned comment there. How did the overall market do today? Well, we're pretty much unchanged for the day. Dow Jones did all right, up almost a full percentage point. Small caps did really well, up 1.3%. As far as the 11 sectors go, we had industrials lead the way, healthcare, and then energy towards the bottom of the name were more defensive, consumer staples, and utilities. Okay, going into this week, we do have some important data coming out. That's going to be the CPI data, and that's really where you might want to pay close attention to the various assets that we will be discussing on this show, because if it comes in hotter than expected, it might affect it in a different way. If it comes in lower than expected, it might affect it in a more positive way. We'll talk about that here momentarily. If we take a look at the CPI nowcast by the Fed, you can see June numbers here, July over here, and what it's predicting, or what it's now casting, it actually looks like there could be a potential uptick, meaning that inflation is going to be a little bit more sticky. You can see 322 to 361, 511 to 522, and then so forth down the list, looking at subtle increases. So we'll look at what expectations are, and we'll get more into that when we come closer, potentially on tomorrow's episode of the Stock Market Brief Show. Now, if we take a look at the S&P 500 on the weekly time frame, we're still in an overall uptrend. When you look at the 5-weekly EMA, you can see price has been holding above it. We came down just about to it and almost connected with it. We started bouncing from that level today. I would say if this starts flattening out, to be a little bit more cautious, and then if price starts closing underneath it, then I'd be even more cautious until we can reclaim those levels. You can see here how we got under it, started going sideways, and then when we reclaimed it, we got that nice big uptrend. The NASDAQ 100, some interesting stuff coming on the NASDAQ 100. We did tag that today, and you can see we bounced from that level, but that's also in confluence with a couple other levels that I'll be sharing when we hop into the smaller time frame charts. If we take a look at the summation index, the parabolic SAR is still above it, indicating that the potential change in trend is still occurring, which means what? It means it could still potentially turn back down. Now, from a more positive note, how can we potentially go up and, absorb that liquidity above us? We need, more market participants. Well, if this starts turning up and we get the parabolic SAR to uptick, it might identify a potential change in trend to continue this movement to the upside. If we look at the summation index for the New York Stock Exchange, started upticking today. So this one has not had a potential change in trend since right here in June, and then right over here when it took place, market's been up. The one prior, market went down, so we'll continue to monitor that. I am noticing that the relative strength lines between the big names like Meta, Apple, Nvidia, Google, Microsoft, Amazon, Netflix, Tesla, there's some of them that are starting to cross down through the 50-period EMA and get some more weakness. So you can see Google over here cross down through it, and it's been, a pretty good indicator that it was going to get continued weakness when it crossed right through here. And that's what we've been kind of seeing. And you can see Apple over here. It's kind of going flat. Meta's a strong performer. You have Microsoft that's crossing down through that today. day. And then you have Netflix is doing fine there, and then Tesla, it's doing fine, but it's kind of going flat there as well. If I take a look at the heat map of today's price action, you can see Google took that bigger hit, Amazon took a hit, Tesla took a hit, and just the big names, but there's still a lot of green on the screen. Now, this could be because over the weekend we had the NASDAQ 100 index do a press release that there will be a rebalance, and as we know, the big moves in these on a year-to-date basis, that means they're, because it's market cap weighted, they're worth quite a bit. So we'll see how the restructure goes when that takes place, and that could be very well why, since it came out on the weekend, is why we're seeing the rest of the market do pretty well, thinking that, hey, people might be rotating, we might be rotating into these type of names. So this is equal weight QQQE. Okay, and you saw this was up 1.8%, which actually outperformed, well, all of these index products over here. Now, if we go on and continue on, there are some interesting divergences taking place. Consumer discretionary bullish percent index, we have that divergence, which we've been discussing. We have the technology sector divergence that's still playing out over here too as well, as price is currently consolidating. If we take a look at the daily time frame for the NASDAQ, this is, could be a potential cup with handle, very short-term cup with handle type pattern, as you have, the move into this resistance zone. You have a cup, and now you're kind of flagging, handling this way. A couple of things that I really want to walk you through as far as where price is. Okay, now on this big run-up that we had in recent times, we started running into resistance. Okay, so I anchored a VWAP here, and you can see price, once we close underneath it, price is held underneath that point up until this point. Okay, so that means that the average buyer throughout this area, right, was all underwater. They were buying, the average was underwater. And then, since it continues on, right, more price action was purchased up here. And then you could see where price is right now. Okay, so price is currently above this anchored VWAP, which tells me all of this price data over here, right, the average buyer based off of volume is basically break even to slightly up. So how would you feel if you were a purchaser from here to here, right? This time period consolidation, you're like, I'm slightly up. You'd be like, okay, I feel fine now. Maybe perhaps you were down a little bit in this area, but now, you're break even or you're up. So the thing is, what would change that sentiment? Well, the sentiment would change, obviously, if you start breaking down from this, and then they say, okay, well, the average person in this entire consolidation is now underwater. They might start scaring, right, and start selling out of their thing or hitting stop losses. Now, I also did a anchored VWAP from this swing low, right? We moved up, we flagged, and I anchored a VWAP right here. And this was interesting because the average buyer, right, since that point is also above. And this is buy the dippers, right? So if price came down, they bought the dip, and then they started buying strength, boom, they're basically break even too. So what I'm thinking here is if price starts getting underneath today's low and we close under that, that could be pretty bad, where we can potentially see some more sell side to come tag potentially right into this area over here where this swing low, right? We might retest that swing low where it matched with prior areas of resistance, and resistance can, once broken, become support. Okay, so where would we be if we're more bullish and we can see more continued action? Maybe perhaps back up to 377.22, which is the, I'll show you where that's at here momentarily, but basically the 2023 yearly high, okay? Well, I would say watch the quarter-to-date anchored VWAP, right? It's currently declining right now. We did have a nice hammer candle, so if we start getting above the high of that, we might be able to break through and potentially try to reclaim and maybe, continue to consolidate up here where we currently stand. So that's kind of what I'm looking at. If you were wondering what that red zone was, well, the red zone is basically matching up prior areas of support that broke down, and then we came up here on this swing high in March to April, right? And then you can see we came into there and acted as resistance. So this consolidation is still in a bullish context, but we need to just be cautious if we start breaking key levels as we're below that quarter-to-date anchored VWAP. Let's take a look at the cues on the 15-minute time frame, but I only on this one want to show you really quickly here where price came down to. This is the lower daily expected move. This is why it's so incredibly important to understand these levels before the day starts if you're trading, because a lot of people might have saw this big red candle and they're like, I'm getting out, or I'm shorting. Well, you would have shorted right into what the market already expected as far as implied volatility goes, and we started moving and bouncing from that level, okay? reclaiming that week to date anchored VWAP, and you can see the quarter to date, we're still below that 5-day moving average. Now, if I update the daily expected moves, tomorrow we have 360, 379 to the low side, which we were talking about today's low, right? If we start breaking down from that, that opens the door to potentially head lower. Now, on the upside, we have 360, 893. That's the upper daily. And I just want to call out that we are below the 5-day moving average. And the longer we stay there, the more it's going to start curling itself over. We're also below the quarter to date anchored VWAP too. So you got to be tactical from a long perspective. So if you play long, just understand that, hey, we might run into some chop or some resistance up here. We would need maybe a market event or some sort of catalyst to really start breaking us through at that particular time. As it stands, right, if you want to play long, just understand that from a week-to-date perspective, looking at that anchored VWAP, if we start getting below that, that opens the door to retest this lower, or to test this lower daily expected move and potentially this lower swing low right here. So that's where I'd say be a little bit more cautious in that area for the Qs. If I take a look at the SPY on the 15-minute time frame, I anchored a VWAP over here to this swing low as price was kind of flagging, consolidating. So you can see here the average buyer since this point is slightly in the green, right? There's some people that aren't. There's some people that are. The people that aren't are the people that are pretty much buying since the start of the quarter for the SPY, as we've had a down day, a couple of down days, and then we had our first green day, I believe, of the quarter. Yeah, actually. So yeah, we had started the quarter here. Oh no, that was an up day. Then we had 1, 2, 3, almost 4 days that were down. So you can see the quarter to date is being pinched between the swing low here and then obviously right here. So what I'm thinking is 437.58. If we start getting beneath that, okay, that tells us that, hey, the quarter to date's declining. There's potential, the average buyer for the quarter is not looking too hot, and then the average buyer that played this pop to the upside is now getting underwater. This would open the door to potentially retest this swing low right in this level. Okay, now from the other side, if we start getting above the quarter to date, just be cautious and aware that we could see some chop as it's a declining anchored VWAP. You want to get above that, and that could open the door to swing higher to that 444.30. And if I take a look at the 15-minute time frame here, you can see as price was moving down, we did have a positive divergence that formed. It was rather unchanged on the day, but that positive divergence played out to the upside. We're below the 5-day moving average. We stated we're below the quarter to date. The upper daily expected move tomorrow is 440. We're just going to round up to 442. And then the lower is 437.33 to watch. Now, as far as a couple potential opportunities, let's take a look at gold. Gold is coiling up right here. So this is where the inflation data is going to matter, right? If it comes in hotter than expected, Fed has to continue to raise rates. That might not be too hot for gold, but if it comes in a little bit lower than expected, right, that could be potentially a good catalyst to break gold out of this wedge. This looks very similar to obviously silver, as silver has been kind of flagging. And if you take a look at silver, it's also very in line with GDX. You can see if I map those two together, these have a strong correlation. So if you're looking for more juice, potentially look into the miners or the junior miners, right? This is just one of the ETFs. Another one to watch is obviously the dollar. The dollar's been selling off here as it's potentially breaking this bear flag and it's holding at this line of resistance, which could very well help, obviously, gold. But like I said, depends on that CPI data pretty heavily, right? So if there's a catalyst, obviously, to shoot the dollar up, that could be potentially bring gold down, and it could potentially hurt the markets as well. When I take a look over here at the zones, you can see that the dollar is reaching into its lower range over here, stating, for me, when I see this, it says, okay, well, this is not the time to short dollars. This could be a time where we eventually will see a dollar potentially bounce. So is this setting up into the catalyst, potentially to see the dollar rise, which could kind of disturb the price of gold and so forth. So yeah, I think that's going to be interesting to watch, but we got to watch that a little bit carefully as time progresses. If you're interested in this swing trader community, we have a Discord group. You sign up through Patreon, you sync your Discord up. We give trade ideas. I give trade ideas. We have a watch list, monthly, weekly, quarterly, daily expected moves. I share them all through here on a little Excel document and a screenshot. I give zones, which are these things right here. And then I have, if you like my charts, I share some stock market indicator charts. And then most of all, you have access to the overall community too. That's all I got for you, everybody. See you later.